Bulls showed up just in time on this Friday. We ramped pretty good into the close, considering there was also some early downside in the session. The fact that we swooped, found a low, Bitcoin bottomed early in the day, rallied into the second half, stocks pushed really strong into the finish, actually brought us right back to kind of the middle point of the week. So it was a really nice finish, and that's why I didn't put the red light on stocks yesterday, just because it seemed there was a necessary bounce just because of the technical support on the charts and that one key gap on the S&P 500 the week of November 6th. So we held very important lines in the sand here, but it was also kind of the minimum to stabilize the market after a pretty steep turnaround from all-time highs less than 2 weeks ago, then to the low end of the range. Crypto got smashed along the way. Bonds woke up and got revived, and the dollar found itself still back and forth. So I think this is working pretty well as a framework. Look at the S&P 500, SPX first, because just to reiterate that November gap, that's important. We held it. That's right here. So we had a line in the sand that we managed to hold on to, and that's the least you can ask for. Now, that's important. There's a few items that look still like they have a bit of political reckoning to confront. Talking about Tesla, thinking about cryptos, thinking about anything that was delivered big promises and big expectations in the weeks running up to the election and then afterwards. I think that still is a pivotal part of why some air came out of the market. Because right now, the market's telling us the pro-growth potential is limited compared to the potential for growth slowdown. But as we talk today, the banks looking good on the one-year chart is encouraging as well. That means that it can't be that bad out there. The economic surprise rate took a big nosedive in the last week. We did miss data, but we haven't missed any major jobs reports. Jobless claims this week were soft, but overall, it's a game of expectations. What we need to look for next is if there's any real deterioration within the economy, because right now you could probably write a lot of this up to just valuation compression. We needed it, especially in stuff that was riding on big euphoric promises, whether it's Tesla, Elon Musk's connection to the president, or the crypto world and the coins. I'm still watching that market very closely this weekend. BTC was soft throughout all of the stock strength. Even though it bottomed early on in the day, it still only added 1% compared to stocks more than that. MicroStrategy is still a major risk point, but these are isolated points of leverage, and the fact that financials are firm and you're getting a rotation within markets, and we found some support, gives plenty of hope for the range of the year to hold. Let's hope the numbers next week come in a little bit better than they have the last couple of weeks, and monitor the headlines from the White House. Hopefully we're starting to get used to the new situation that it will be volatility inducing. Have a great weekend. Thanks for tuning into the Schwab Network. I'm Oliver Rennick. I will see you on Monday.